All right, guys, welcome back. This is part 2 of tonight's video, and this is just the trading ranges for tomorrow. And before we head into that, if you guys could take a minute and give this video a like, make sure to subscribe, turn on notifications. And if you want to support my channel financially, don't forget about that thank you button. I have a ton of content coming up in the near future, and everything goes towards supporting that. So tomorrow is Friday. It's the last week of a very historical trading week. We had elections, we had rate cuts, and tomorrow the implied move for SPY is between 592 and 600. So 600 in view for the first time. And the 30-day average volatility is wider than that again, 589 to 602. We did have a big enough VIX crush to bring down our trading range to less than what we usually have seen in the past 30 days. And then on Monday's contract, 590 to 601. Now, we are at all-time highs, so we don't have anything at all in our trading range for tomorrow. The 35 EMA is the first thing, and it is underneath us. And usually when the 35 EMA is underneath us, we do tend to get a pull downward. You can see we don't stay away from that level for too long. We'll usually swing down and then up and back. So here we had a big move, and the 35 EMA is underneath us. That makes it a very real target for tomorrow. And now, because we don't have anything in our trading range, what I always do in this situation is drop it down from the 30-minute time frame to the 5-minute time frame. That's the next time frame down. And you could see today and yesterday, this 5-minute 35 EMA was our support. So yesterday, this was after elections, we gapped up, and then we consolidated back to the 5-minute 35 EMA. Today, we gapped up. This was the level that was our support for the entire day. So put that 5-minute 35 EMA on your chart in this kind of case where we don't have anything else in the trading range, and it gives you something to target, something to watch, so you don't just have an empty trading range. So that is SPY. And SPX, exactly the same thing over here with different numbers. The implied move over here for tomorrow is between 59.35 to 60.10. So we have 6,000 here, and in futures we already hit 6,000. You could see right here ES is trading above 6,000 for the first time. And then the 30-day average volatility a little bit wider, 59.15 to 60.35, and then on Monday's contract 59.20 to 60.25. And I don't think I added this in SPY right here, but we do have this up gap right here at the bottom of the trading range. So let's actually go back to SPY and put that in, because I said that there's nothing in the trading range. That's not completely true. We do have this bull gap, which does add a bit of a buying level into tomorrow's trading range, and then that 35 EMA coming up. So those two together would probably act as a support if we do pull back a little bit. So SPX back to over here. So same thing over here. We've got this up gap. This is from FOMC, the rate cut. And then this gap right here is the election gap. So we have two big gaps. And then the bottom of the implied move is 59.35, 35 EMA coming up right here. Very overbought right here. Looks like we could get a cross down in the morning, which doesn't necessarily mean we have to drop fast and hard. It can mean we can come down just a little bit, wait for this 35 EMA to come up, close within the trading range. And again here, drop it down to the 5-minute time frame, put that 5-minute 35 EMA in. That way you have something in the trading range to guide what is happening. So if we're printing blue candles above this, then look up and look to the top of the implied move, and then if not, then look down and target this gap underneath us. And this is the 35 EMA. I don't know if you guys know, but this 5-minute 200 moving average is the same as the 35 EMA on the 30-minute time frame. This is why I use the 35 EMA and the 200 MA, because they do move between time frames. So it's a really cool thing. But add that 5-minute 35 EMA to your 30-minute chart, and that way you have something a little cleaner to look at. So tomorrow, if we do come up and we get into the top of the trading range, then I would likely be looking at 60.25 as the strike to sell, possibly 60.10. I don't know if I feel too comfortable with that one. I'd probably look to that next one, but 60.25 to 60.35 looks like a nice spread if we do keep moving up. And then to the downside, if we do drop, then I would be looking probably to 59.20. So 59.20, 59.10 as a spread, or maybe something like 59.25, 59.15. Since we have this up gap and this 35 EMA, I feel like that would hold. So that is my game plan for SPX. QQQ, the implied move over here for tomorrow is 509 to 518, and that is from options. And 30-day average volatility 506 to 521, and on Monday's contract we have 507 to 520. And again, nothing in tomorrow's trading range at all. We are at all-time highs here. We do have this up gap from FOMC today. Underneath that we have the election gap, and all-time highs, previous all-time highs were right here. So new all-time highs at 514.33. And because we have this 30-minute 35 EMA underneath the implied move, underneath the 30-day average volatility, it's very likely we see a flatter day or a down day. And flat can mean slightly up too, maybe nothing too crazy for tomorrow. We are reaching overbought, and that in itself could start us moving back towards this 35 EMA. You can see 35 EMA is a level we return to all the time. So when we're too far away, when we've been too many days not hitting that level, probability-wise, we see it really soon. And here as well, add that 5-minute 35 EMA. You could see that after the election, we gapped up. We consolidated back to the 35 EMA. Today with FOMC, we gapped up, and then we brought it back to the 35 EMA on the 5-minute time frame. So if there's nothing in the implied move for tomorrow, like tomorrow, there's just nothing, then keep an eye on this 5-minute 35 EMA. You can see a little divergence in this time frame as well. It's a 5-minute time frame, so it's not super strong, but it is there. So that is QQQ, and let's see if there's anything else I missed. No, so let's move to IWM. The implied move tomorrow for IWM is 233 to 240, and that is from options. 30-day average volatility takes that $2 wider in each direction, 231 to 242, and the implied move on Monday's contract is 232 to 241. And to the upside, we don't have anything. To the downside, we don't have anything either. So we have 35 EMA. It is underneath the bottom of the implied move, but within the 30-day average volatility. So we did get a cross down here today, which did keep us flat, and actually it was more down 0.35%. So we did have a down day today with this, and a follow through on that could mean a trip down to the 35 EMA. So it doesn't have to be a huge drop or anything. 35 EMA could act as support, especially since we got it all the way above this election gap. We are very close here to all-time highs, which I promise I'm going to put it in over the weekend. It's right around here, 244.5, somewhere around there, is all-time highs. So we're not far away from all-time highs. So if we do drop down, I think we're setting up to touch all-time highs. I would not be surprised about that. And we do have momentum starting to turn in that favor. So IWM, much smaller trading range than we've been seeing this week, only 1.23%. That is still big. Russell Volatility Index came up. I did not mention this in the other video, up 6.91%. So that is something to be aware of. And outside of that, looks like a pretty easy trading range. If we do come up tomorrow to close the week, I would be targeting 241. So 241, 242 spreads look good. To me personally, that is where my risk tolerance would take it to. And then on the downside, we have, I'd probably look to 232, 231, just because we do have a $2 wide range here. And IWM has been giving us a $1 range lately. So because we have two between the 30-day and the implied move, I would take it out to the next day for sure. But if you're feeling wild, this 35 EMA is coming up. That could act as support. So if we do drop, 233 may not be a bad strike. You have to decide what your risk tolerance is and go with that. The premium is definitely nicer at 233, but 232 is safer. So lastly, we have DIA, and DIA has this really funny little trading range tomorrow that is completely disconnected with what we saw as projected at the beginning of the week. When we opened near the 50-day moving average, we're way outside of the implied move at 432. So our trading range for tomorrow, 434 to 440, and that is from options. And here again, we don't have anything in our trading range except for all-time highs just above us, which is not really a level that we can rely on. Really, it's not really, it wasn't a resistance, it wasn't a support, but in this case, drop it down to the 5-minute time frame. You could see the election gap. We consolidated back to that level and really stayed close to there. So back on the 30-minute time frame, this 35 EMA is underneath us, which is bearish on the day. And we also have an overbought and a cross down here, which if we do see a follow through and a little bit of red coming here, then this 35 EMA definitely should be a target. So there you have it, guys. I don't know if you can hear my dog snoring in the background. It's pretty darn cute. But everything you need to make tomorrow awesome is in here. Put it on your chart, whatever you trade, and have a great weekend. This has definitely been an emotional week for everybody. Whether you're happy about it, whether you're sad about it, we all need rest this weekend. So make sure you rest up, have fun, trade safe, make sure you take profits when you're up, and I will see you guys on Sunday night.